Morning, it's Harvey Jackson. More tariff chaos, I guess, is the topic here. Trump has a State of the Union address tonight, and it sounds like he might be going off on tariffs again. But there's a couple countries, China and Europe, are maybe pushing back on the tariff, and because they don't like the position. But there's a CBC analyst actually just talking about let's get back to work here.
Saying they're waiting for guidance from courts, which I suppose they probably have to. But you can get the sense they're going to try to push that off as long as they can. Can they afford to not sort of jump in and say, absolutely, American businesses that paid these tariffs should get their money back as they were imposed improperly?
Yeah, I think we have to understand that this is not just a central economic pillar for the president, the imposition of tariffs, but also a key political deliverable. He wants to be able to enter the midterms saying that, he's brought other countries to their knees and try to rebalance what they would, describe as a trade imbalance, but with various countries. I think, we've talked a lot about what Trump's reaction might be or not be, but I want to go back to what Rob has talked about in terms of Canada's reaction. And I think that we need to keep calm and carry on here. There has been virtually no change for Canada, even with Friday's ruling, Obviously, sectoral tariffs remain very much in effect for steel and aluminum, and forestry and other sectors. So those are still causing an enormous amount of pain. So I think on the Canadian side, there needs to be some consideration of, what we can do to come back to the table and find some middle ground. Obviously, the president, I would think, is going to be in a deal-making mode. I'm not going to suggest that that's going to mean he's feeling particularly, aligned to concessions. But we know that both governments were close on a trade deal sometime last fall, at least on sectoral tariffs. So is there an opportunity, now that there's uncertainty on that global tax, to try and find some progress in other areas? Those are the conversations I hope that our government is having south of the border.
So you have it there, but there's still the whole fear that the Kuzma is going to be at risk. I saw this on X, and I thought I would post this as well. Canada's housing downturn is the deepest among major economies. We're worse than China. Like, holy smoke. Anyway, back to the tariffs here. Some of the tariff risks that you can talk about: tariff uncertainty, policy volatility. It's medium to high. Expect choppy trade, retaliation from key buyers like China, Mexico, South Asia. Limited retaliation is the bullish for grains. Bearish for grains, the targeted ag tariffs, corn, soybeans, exports hit, especially when it comes to China. This is a real risk to watch. Input costs is a risk. Illegal challenges to the tariffs. Because there's already been some legal challenges already, right? And U.S. dollar, I would say that's another key one to watch there as well. Holy smoke, I just jumped ahead here, but that's okay. La Nina weakening very fast here, so that if it's we're gonna have La Nina. It depends on the speed that it's going to go into neutral, which is the next phase, and then into El Nina, right? You can see that there's a snow band here. There's a little bit of eastern seaboard kind of weather that's hitting there as well. You can see the active weather. There's a little bit on all coastlines and going into Ontario. Pretty fast moving. Cold to the north, basically here, and that's where the snow is hitting for the province, the prairies. It looks like Ontario is going to get slammed there as well. Canola currently trading down. It did trade down yesterday morning, and then followed the diesel fuel oil market up during the trade. Rapeseed is up, and soy oil is basically unchanged at 59.8. Palm oil down 30 ringgits. Crude oil unchanged at $66, and the U.S. Harbor diesel is just slightly down as well. Soybeans 11.45, down $4.75. Spring wheat down 2 cents at 5.80. Hard red winter down 4.75 cents, and Chicago is unchanged at 5.73. Corn is flat at 4.40, and the Canadian dollar is just down a fraction there as well. So if we're looking at this as a timeline going back to the high that we had here to our low, that was made in December. We're just getting into that 50% to 60% retracement value. And we're already in the beyond the 61.8 retracement value if we look at it in the November contract. This is definitely a sell signal, sell grain. Um, Same area, not quite as high, but right up to the 61.8 when we look at the European rapeseed. This is the price differential, 106. Price differential between European canola and European rapeseed. And yesterday I showed ranges of expenses depending freight to get to Europe. Maybe I'll revisit and put that back onto the chart here, but it's like the high end of $85 going through T-Bay and the high end of $103 going to Vancouver to get to Europe. So right in that area where why would you arbitrage that with no cost, right? So anyway, here's a soybean oil futures going back to July of 2023 as a high. We're in that 78.6 retracement value. Soybean futures trading rate at the 78.6 from its high to the low. That's going back all the way to April. Crude oil, nice leg up. And then if we look at that leg up, that's the green here. Soybean oil and diesel fuel futures are basically trading lockstep since the beginning of January. Canadian canola is in the middle of the range, only 12% up, and soybeans actually are trending down and only 8% up. So you see close to 20% for the soy oil and diesel fuel futures, obviously trading lockstep together, and your crude oil is up 16.6%. Canadian dollar trending down up against your short-term moving averages, and your US dollar index is actually still trading up, now getting closer to this 200-day moving average. Wheat, so this is your front month, March, and it's soon to be expiry, so we'll go to the May. But you can see that we were still caught in that channel, nowhere close to 200-day moving average. But would be watching for the Kansas, or for the Minneapolis is the Kansas. The Kansas is trading above this 200-day moving average. If it can bounce off of that and go back up, or is it going to breach that 200-day moving average? So you breach it and then it doesn't stay. So here's Chicago, still above the 200-day moving average, and again showing that same kind of timeline where it got above and then it breached below. So hopefully we can actually hold this time. And that's all I have for you today.